So my name is Nicole Smith. I am the Communications and Events Coordinator here at Spark. I am also very happy to welcome all of you and to have Kim Snyder, who will be doing the presentation today. But before we get started with that, I would like to thank our partners who allow us to do this every week. So I'd like to thank the Niagara Falls Small Business Enterprise Center, as well as the South Niagara Chamber of Commerce, who partner with us in order that we are able to help you, the entrepreneur and the startup, oh my goodness, be able to glean from such great local and in some cases national, and even a few weeks ago we had international talent to be able to help you be better at what you already do great. So it is my total pleasure to introduce Kim Snyder of KAS Business Services. She is the founder of that organization. She has been doing what she does for many years. She's very knowledgeable in the area of finances. And so without further ado, Kim, I hand it all over to you.
Thanks, Nicole. As Nicole said, I'm Kim Snyder, owner of KAS Business Services. We provide bookkeeping and accounting and business consulting currently located in the Spark Niagara office, which is how I have my relationship with Spark. So I was asked to do this webinar to help businesses move forward in these very uncertain times. The information I'm presenting to you isn't new. It's basically based on the principles of a sound foundation of any strong, successful business. So what we do in my office is we do full cycle bookkeeping, accounting, and tax, and business consulting. As Nicole said, I have 30 years of experience. I work with small businesses, proprietorships, corporations. So I've been doing this a really long time. And I know that successful businesses, I have all kinds of size of businesses. I have $10 million businesses to $50,000 annual revenue businesses. So I see the gamut of what goes in place. The strongest businesses, it doesn't matter what the size are, have the systems in place. And one of the most successful ways of measuring where somebody's going or what they're going to do is creating good budgets. And I'm not going to just talk about a budget. I'm also going to talk about, what's the future and so on. So typically business owners will make budget, and they'll make it maybe at the beginning of the business. Maybe they're doing a projection for a bank or a business plan, or maybe they're looking to make a large purchase initially, so they'll have a budget. Oftentimes what happens, because entrepreneurs get busy, is once that's accomplished, they kind of carry on and don't track the numbers as carefully. So that's what we want to try and create a system so that no one actually is in that situation. Likes to prepare a budget, and pretty much people don't like to live by a budget, which is usually why they don't do it. So a lot of people, whether they're individuals or businesses, they're winging it, or they'll say to me, well, I have a general idea. A general idea is not going to get you to go where you want to go. So why a budget? Because cash is king. So what do I mean by that? It doesn't matter how much you make. You can make $50,000. You could make $5 million. If you're spending more than you earn, or your business can't support, your business expenses are too high, you're going to run out of money. It's the same problem, doesn't matter how much you make. So you want to budget to avoid that. And I know you're all thinking right now, yes, well, I know that. Well, we all know that, and yet we still resist doing it. So this past 7 months have especially made people aware of how vulnerable our financial situation is. Who could ever have predicted what would have happened? Businesses being shut down overnight, trying to survive. Rents still have to be paid. People still have to pay their mortgages. So not only is the business impacting the business and the business owner, it's impacting everything. And then there's the ripple effect right through the economy and right globally. Nobody could ever have predicted that. Those people, those of us who were caught without any cash reserves, some people immediately went under, and some people have just carried on by the skin of their teeth. Some businesses have thrived because there are certain businesses, obviously digital Zoom, for example. Oh my goodness. So it depends on what's happened. However, having a cash flow, Nicole, could you mute that phone number? Because I can hear an echo, please. Sorry about that. So that's why I say cash is king. By having a good budget, you will develop peace of mind, and you're going to be planning for the future while you're taking care of the present. That's what a good budget can do for you. It's not just about the future. It's not just about today and tomorrow. It's you also want to be budgeting for the future. So I will admit that before I became really diligent, doesn't matter that this is my history and this is my industry, I had my own slides up and down of keeping budgets, keeping good accounting, doing all of that. You know, it's like the shoemaker shoes, same thing. However, I can tell you that at least in the last 10 years, at least, probably more, I very diligently keep a budget. I monitor it almost daily. I know where my cash position is. I know what I need to do almost every single day. I know what my bank balances are, and you know what? I don't spend hours every single day on it. I look at my budget, I look at what I have, I look at what's in my bank, see if the flow is there, I look at what my receivables are. It all flows in the same spreadsheet. So I have the tool to look at every day, at least on a weekly basis, and know if I'm going to be in a good position at the end of the month and at the end of the year. That gives me peace of mind, because if there's going to be surprises, at least I know that I have planned for some surprises. So budgets are actually quite simple. They're comprised of two elements: money in, money out. It's not rocket science. It's the details of how that happens that bogs people down. So because we are working with businesses, I'm working with businesses here, you being the business owners, we all need two budgets, a personal budget and a business budget as a business owner. So the personal budget is going to obviously have your personal expenses like mortgage, rent, utilities, groceries, all of those things that you do on a personal basis, property taxes, eating out, all those things, buying clothes. The other ones for your business may or may not have some of the same elements, and it doesn't matter whether you're incorporated or not, the principles are the same. How corporations work is slightly different from the perspective of rules. However, the idea of a budget is pretty much the same. So what I'm suggesting here is that you have two budgets and you keep them separate so that you can plan your personal life and you plan your business, and then the business revenue flows through to the personal revenue, and it all should flow pretty seamlessly. So what you're going to see are lists that are incorporating only expenses. So I'm starting with expenses. Why am I starting with expenses? Because you start with expenses, you all have expenses now. If you look at what you want to make for the year, without looking what your expenses, your current expenses are, then you're not looking at reality. In order for you to know where you're going to go, you have to know where you are. So this is about, first of all, knowing where you are. So be strict with yourself, be honest with yourself, and put everything down that you're spending money on. I picked these are just random numbers, sort of what I think, what I see in people's books. So what we're going to start with, so we have two different types of expenses. We have fixed expenses, which is what fixed expenses are. No matter what happens to your income, no matter what happens to your business, you've got to pay those expenses. You've got to pay your mortgage. You have to pay utilities. You have to pay your taxes, your telephone. All of these things they're monthly things. Now, obviously, you can cut your cable and your internet out. However, most of us keep those kinds of things. Those are fixed expenses. Credit card payments. You still have to make your credit card payments whether you have money or not. So in this particular case, this is I think it's kind of typical, and it's not too elaborate. Monthly, on just a fixed expenses, we have $27.95, and gross annualized $33,540. The important thing about these numbers is these are after-tax numbers. We're going to talk about tax in a minute. They're after-tax numbers. Then you have your variable expenses, groceries, personal services, you know, haircuts, things like that. Repairs and maintenance, fuel, that's auto fuel. You have pets, house cleaning services. All of these things, most of the things, obviously you still need to buy groceries, but mostly, usually if people's income is impacted, people cut back here. So these are areas that you can either cut back on or eliminate if you need to. However, there are things that you're currently spending money on. These ones are $2,200 a month, which is a total of $26,400 a year, again, after tax. So you want to take those numbers and you want to add them up. It might surprise you. This person's actually spending almost $5,000 a month, and that's $60,000 a year after tax dollars. So if you're thinking in your business, and I made a small example here. So if you're thinking I need to have $60,000 to live on, no, you need to make more than $60,000, obviously, because you still have to pay tax. And then there's other things you have to pay too that we haven't factored in yet. It's coming. You have a business. So businesses, they're going to have fixed expenses as well. Again, this is kind of a typical scenario for a small business. The payroll number, this is an unincorporated business. I chose an unincorporated business just to simplify it. So, and a lot of people probably on here are unincorporated. And if you're incorporated, you can still have a budget, it's just that some of the elements might be a little different. So, and usually, so once we get to the final numbers, you'll see why I say this company may very well have payroll in it. So I put payroll in here just because if you have staff to help you maintain your business, that's a fixed expense. If your business goes out of business, obviously, or it has to reduce, obviously your staff can go, but it's still a fixed expense. Maintain the level that you're at. You want to count everything that you spend money on. And there's way more stuff that you're probably spending money on, but that's a general idea. Then you have business variable expenses. Again, office supplies, tools and equipment, marketing. I see so many businesses without a marketing line on their budget and without any marketing expenses on their budget. One of the rules of thumb in business is that you always want to plan and budget for marketing because no matter what's happening, if you stop your marketing, you're stopping your business moving forward. So you want to have an element of marketing, whether that's your website, whatever your marketing is, whether you have a marketing consultant, whether you're doing social media, doesn't matter. You want to have an expense line there. And you'll see in both of these budgets, I put a miscellaneous line in there. I put a miscellaneous line in there because stuff happens. You know, maybe your laptop broke and you had to get it repaired. And so that's a miscellaneous expense. So these expenses are $5,700 annualized, again, after tax dollars. So the business, after tax dollars, has to bring in $62,700 a year just to exist and maintain the level it's at after tax. So what does that mean? What do we have to look at now? We obviously have to look at tax. So together, you've got your personal, you've got your business. So in total, after tax dollars, $10,220 a month. You have to be billing that after tax. Annualized, $122,640. Sound doable? Absolutely sounds doable. However, we still have some elements to add into. And again, this is what people forget. There's also what's called a 10-10-10 rule. Some of you may know this. There's the rule of the 10-10-10 is you want to have 10%, you want to pull out of your gross revenue being this number here, You want to pull out of your gross revenue 10% for savings, 10% for donating or tithing or giving to charities, and I'll talk about that in a minute, and 10% of fund money, disposable income, or whatever. This is the pay yourself line. You want to have some money to do some things with that you have available to you. Maybe take a vacation, whatever. So let's just look at this line, the disposable line, and we'll look at this line, the savings line. Imagine if you had, this is about $25,000. Imagine if you had this in your bank in March of 2020. Would your experience have been different? I bet you it would. So what's this about? This is about, for the concept of tithing, why do we say that this should be a must? This should be a must because the rule of donations and tithing, and depends on your beliefs, really is that it's all about, you know, fulfillment. It's all about sharing. It's all about, you know, the general rule is the more you give, the more you get. You're not giving to get, but it's just that it opens up the energy, whatever you want to call it. If you're giving and you're being fulfilled, your business and becomes attractive. It's a part of, you see companies all the time advertising that they donate to certain organizations. Well, people like to do business with those companies because they feel like some of their money is going to a good cause. That's what that principle is. So we started with this number, the 122,640. That was what the gross of the two expenses were. We added the 10% rule, the 10-10-10 rule, which is 30% of this number. We have to add that in. So because you have to bring that in too. This is just your expenses being covered. Remember, these are all the expenses. So then you want to also give. Then your total gross income becomes 159,432. So now you've gone from having to earn 122,640 to 159 to cover off. These are your musts. So now what we're aiming for is a taxable income because you have to have a tax line. So business expenses are going to reduce your taxable income. So this is your gross income, 159,432. Business expenses are deductible for tax purposes. They're going to reduce your taxable income to $96,732. I use an average tax rate. It's just a number. I just pulled a number out there. I'm not going to sit and figure out what the actual tax on this was. So does this work out exactly? No, it's an example. So your net business income, net taxable income is $96,732. 34% is $32,889. If you're budgeting for taxes, guess what? Your gross business income now becomes the $159,432 plus the tax of $32,889. Your gross income to support the lifestyle that we just went through of all of the expenses is $192,321. That's what you need to be billing in your business to support everything that we just went through here and support your business just where it's at. That's not about growth. That's about maintaining, and that is a break-even scenario. So actually, Nicole, I know we said we're going to take some questions at the end, but I want to know if there's any questions because these are all the concepts. This is all the, so let's just see if there's a couple of general quick questions. If I'm going to cover, if you ask a question and I'm coming to that, I'll tell you.
Okay, then absolutely. I'm just trying to swallow these numbers. Wow. So are there any questions?
By the way, the presentation's available right afterwards, so people can go back and look at it.
Yes,
right.
Absolutely. I'll send out the presentation to everybody who's joined us today. Absolutely, for sure. So are there any questions from anybody who has who's with us right now? You can write it in the chat box if you wish, or if you want to unmute and ask the question directly, please feel free to do that. Now would be the opportunity on what's been shared so far.
Okay, so it doesn't look like there's any questions. I know these are a lot of numbers. I live and breathe numbers. I know I went through them pretty quickly, but that's because of my time limitation. However, you'll have a roadmap to work with and a concept. It's really about the concept and the principles of this that I want you to get. So it's not rocket science, it's simple math, it really is. We'll just start with the simple math and we'll do advanced planning. I'm going to talk about some advanced planning, how to move forward, not just how to stay in a break even, because what I said, that's what we had there was a break even scenario. In other words, we planned for whatever's coming in is going to get spent either personally, either in your business, either by donations, you've put it in your savings account. So it technically is being put away so is savings spending it? It's not spending it, but it's putting some aside. So it's a general rule of what you've planned for, and then your taxes. So it's a break-even scenario. So who wants to live break-even for the rest of their life? Not me. So what we want to do is use this plan in moving forward, especially right now. Some people are at break-even. Some people are at still trying to pull it together and figure it out. And so that's why I started with this concept. If you can just start with the numbers that you have and put them together and figure out, this is what I need to do, then you figure out, how do I generate the revenue? And we're going to talk about that in a minute, because some people will look at that number and say, well, if I have to make 196, basically let's call it 200,000, and I'm billing 100,000, how is that ever going to happen? It will, if you're focused on it. So again, what about the future? The now is covered. So what do you want to do in the future? You have to think about what you want to do in the future. Are you looking to buy a house? Are you looking to grow your business? Do you need some staff? What do you want to do? And as a result of what you want to do in the future, what kind of expenses will you incur? Is your rent going to go up? Is your mortgage going to go up? For example, I'm hiring some full-time staff now because I'm growing my business. So I've had part-time staff, so I have to increase my payroll. So in order for me to take my business to where I want it to go, I've got to increase that line. I have to increase that line first, honestly, before I can bring in the business. So I have to plan for this increase and then know that I can carry that increase for a short period of time until I bring in the revenue. And that's the part so sometimes people will hold back and say, well, I can't do that. That's why you want to have a savings line. That's why you want to have some money that you're putting away, you're not breaking even, so that you can invest in your business instead of, sure, there's some money right now, especially with, people are calling it COVID money, call it whatever you want. There's money out there right now. Not everybody's eligible for it. The banks aren't talking to certain people, especially during this time, because they feel like it's a risky time. So if you have some savings, it will help you grow. One of the things you also want to do, and many of you may be just starting out in business, many of you may be towards the end of your business life, or you've been in your business for a long time, many of you may be right smack in the middle. And I'm saying plan an exit strategy. Like, why would it be planning an exit strategy right now? Because you want to think about what you want your business to be in the future. So even if you're just starting out, you do want to take that into consideration. What do I want my business to be in the future? Because if you're not future pacing, it's called future pacing. If you're not future pacing your vision or your business, how are you going to create a path to get there? You don't know where you really want to go and what you want to do. So are you building a retirement plan? Are you planning to make a great big business and sell it for a profit? Are you creating a business for your family, for your children to work in? Have an idea of what you're creating. I did not put a line in here that you're creating it for income for yourself and for a job, because that may be what you're doing. This is talking about what you want to do with it, where you want to go with the future. All of us need to have income to support ourselves. So that's one of the things that we're doing. Think about what you want to do. So when you're just figuring out what you want to do with your business, then that's going to help you determine what do I need to grow? How do I plan growth? What do I need to know about it? So in order to plan growth, you have to estimate future costs for your life. And then you take those future costs and you do just what we've just finished doing. You break them down to a monthly budgeted amount. So if you want to, so I had a mortgage line in there, a personal mortgage line. I think it was $1,015 a month. So let's say you want to get a house that's $2,000 a month in a mortgage. You want to put that in your budget. So in your future budget, not your current budget, in your future budget, so you can start seeing how do those numbers flow out. So what is, what is it that I have to increase to my expenses and get to my bottom line? And then you'll know, so if I'm increasing my monthly revenue, let's just use that number. If I need $1,000 more a month after tax, that's another $12,000 a year. How much income tax is on that, and so on. You have to add that number and say, I need to generate this much more revenue, this much more income to support what that change is going to be. Whether it's a business change or a personal change, it doesn't matter. You want to plan for it. So increased revenue means increased costs. I just talked about that. More staff, more payroll costs. More space, you need more additional equipment or vehicles. As you get busier, all of a sudden you're realizing that you may not be able to service and you may not be able to deliver with the existing resources that you have, whether it's staff, whether it's software, whether it's whatever, whether it's inventory, whether it's space, it doesn't matter. All of those are resources you're using to run your business with. So you have to take a look at, okay, what do I need to do to keep my deliverables going? Because you can't just keep doing what you're doing. Your business will run into the glass ceiling. And then you want to add this to your additional costs for business growth, and then that's new gross revenue you will need. So, for example, we talked about an additional $12,000. Let's say you want an additional $100,000 over the next 2 years. How do you figure that out? Okay, so I want to grow my company by another $100,000 in the next years. So how do I know how many more sales? So what you want to do is break it right down to how many more sales am I going to need? And a lot of people don't know how to do that. What you want to do, figure out what your average sale is. I almost never have this discussion unless somebody sells a widget for $10. They know that widget is always $10. I almost never have this conversation and somebody says, I don't know what my average sale is. I have so many different sales levels. I just told you I work with large companies, I work with small companies. Each one of them is a different monthly, not a billing rate, but a monthly billing amount for me. So what is my average sale? Hold on, I need to drink water. So if I know that I need to increase, I want to increase by $100,000, not me personally, but, and let's say my average sale is $1,000. How do I know what my average sale is? Take the sales that you have and just, again, use simple math. It's not perfect. You're talking about averages. Averages generally come out around the right number. Take the number of dollar value of sales that you have. So let's say you're selling $100,000 right now. Figure out how many sales it took you, how many customers, how many transactions it took you to make that $100,000. And divide that. It's, again, just use the simple math. Is it perfect? No. It's a guideline. And whatever number you come up with, it's your average sale. So if you want to make so if you're selling $1,000 and you're making $100,000, then obviously your average sale, you have 100 customers, your average sale is $1,000. Sorry, I did that backwards. If you're selling 100,000 and you have 100 customers, your average sale is $1,000. That's how it comes out. So some of your sales might have been $2,000. Some of them might have been $500. I'm talking about your average. So then they have to say, okay, so if I want to make another $100,000, I'm going to have to do another 100 sales. Well, what did it take to make the original 100 sales? What resources were you using? Do you need more staff? Do you need more supplies? Do you need more space? Do you need more equipment? What resources? That's how you figure out what you need to build the foundation to grow to that number. Because lots of times people will set a number and they'll say, I'm going to make this much money. And they'll push themselves to it. And all of a sudden they start getting sales orders in. And guess what? They can't deliver. And when you can't deliver, you lose integrity, you lose customers fast, you lose reputation, especially in today's world, in social media, everything else that's going on, Google reviews, whatever. It doesn't take much to get out there that you're not delivering what you're promising. You may have the intention, but you haven't put the resources in place. And so you have to figure out, this is probably one of the most important lines here. What will it take to make those sales? Whoops. And then those in the new additional costs that you want to add to that line, as this is your future budget. And then don't forget the increase in the taxes and the 10, 10, 10. These increase when this increases. And that's probably as clear as mud, but that's the best way I can explain it. Is that clear, Nicole?
Yeah, but you're right. It's a lot to,
it's a lot to absorb. So the reason why I put workshop here, what time is it? Give me a time frame here.
it is 1:30. You got lots of time.
Okay, so we've got some time. So there's a few of you here. So this is what I want you to do. Because we have the time. I want you to just do this simple math. You may not have all your books in front of you. You may not, just pretend. Just work out what you think your average sale might be, what you'd like to do. Figure out a number for yourself. So just take a few minutes to do that. Figure out a number for yourself of how many extra customers you might need, and then how many more resources, what other resources would you need to do that? You might need more advertising and so on. So just take a minute to write all that down. You don't have to share it. I'll just give you a minute. The reason why I'm doing that is it gives you an opportunity to sort of cement the information that I just went through. That's as clear as mud. And if you have any questions at all, you can also ask questions. So Nicole, after you've written down a couple of numbers, you just tell me if you had a couple minutes to do it, and then I'll move on. Nicole gets to be my guinea pig. You're laughing. I can hear you.
That's because
The rest of you might be sitting there.
I'm very conservative in my numbers and realizing that I probably should dream a little bit bigger than I tend to.
Okay, good. So even if you had that realization and you haven't got to the numbers, that's a really good place to be. So on that note, we'll move forward. You can do this. I encourage you to do this. Even if you don't have an immediate plan right this minute, do this. Have a look at it. Say, what's it going to take to grow my business? So again, I've been saying throughout, it's not perfect. None of this is a perfect calculation. It's just a budget. It's a plan. It's a guideline for success. But what you want to do, and you remember at the very beginning, I said what I do every single day or week is I review my budget. I review where everything is. You want to reassess your budgets and your actuals at a minimum quarterly. I highly recommend that you look at things, especially in the early stages, on a weekly to a monthly basis and not wait till quarter. Unfortunately, many people don't look at this stuff at all until tax time. And if you don't know where you are in your business all the way along, then it will all be a surprise. And many times people are actually disappointed that they didn't do better in their business. But if you're not looking at the numbers, it said here, you cannot manage what you don't measure. So if you're spending more money that you had originally budgeted for, you want to adjust your budget accordingly, which means that you have to realistically take a look at, I'm not doing enough sales to cover my budget. Are there costs, like some of the variable costs, for example, that I need to cut back? Or do I need to do more marketing? Or do I just need to push production? You can't manage what you don't measure. Measure, assess, reevaluate. As a business owner, those are some of the best moments that you can spend. And lots of times people feel like, I don't have time for that. If you don't have time for it, your business is going to suffer. So simple rules for a good foundation. Keep your bookkeeping up to date so you always know where you are every month, every quarter. Don't spend your HST or your payroll remittances. That may sound like it's, I can tell you the majority of people spend it. They don't keep their HST for their remittances. They'll pay their remittances when it comes up, but they're usually scrambling because they didn't hold on to it. Put it into a separate account. Or, even better, if you're bringing the money in, send it to the government, make installment payments. That may not be my favorite thing to do because I'm like you. It's like, why send it to the government before I have to? But if you can't not spend it, send it to the government. Make income tax installment payments. If you owed tax last year, you're probably going to owe tax this year. Make your installment payments. At a minimum, it'll reduce what you're going to owe. If you have all of these things in your budget that you're going to do this, then it won't be hard. It'll just be something that you do. Any debt, include the debt in your budget. Include a debt payment in your budget. So don't say, well, when I get this number, then I'll pay a big chunk off my credit card. Make a small monthly payment more than what the principal is. And I know that's a concept we all know. Put it in your budget. It becomes a part of what your revenue line should be. And stay on top of accounts receivable. I can't tell you how many people have accounts receivable in their books that go back 2 or 3 years. And if they're a new client, I'll go through it all and I'll say, what's happening with these accounts receivable? Did you collect them and they just didn't get recorded? What's happening to them? Oh, I still have to go back and collect them. Well, guess what? Any account receivable pretty much over 6 months, you're likely never going to see. Even over 60 days, you may not get paid in full. You may not get paid at all. And what happens with people is that, first of all, when you first deliver something, that is when people are at their happiest, and that's when they want to pay you. That's when you're the most valuable to them. So you want them to pay you when they're really happy. Send them a bill, have limited terms. My terms are 15 days. Don't go past 30 days on your terms. And send reminders. Reminders are not offensive to people. And if they are, they're not necessarily an ideal client. So you want to stay on top of it, keep your receivables. Everything I'm talking about here, all of this here is all about cash. It's all about cash is king. Keeping your accounts receivable down means that you have more cash in your business. So if you have a large accounts receivable and you can't pay your bills, then you might be out there scrambling trying to bring more sales in, when in fact what you need to do is collect this stuff. You've already done the work. You've made the sale. You deserve the money. Negotiate terms with vendors. Get at least 30 days to pay. If you're offering 30 days or even 15 days, most vendors will go 30 days. They'll at least probably go 15 days. Some will go 60 days, depending on who they are. Negotiate the terms. The more money, that cash flow that you can keep rich flowing in your business, the more you're going to be able to have that peace of mind that your bank isn't running low at the end of every single month. You want to have a good team. Invest in advisors. Many times people will say, well, when I'm making more money, I'll invest in advisors at the beginning. Build a relationship with your bank. It's hard to do right now remotely, but guess what? You can still do it. Build a relationship with a lawyer. Find a lawyer that works with business, small business, not just any lawyer, not just the friend down the street because they're a lawyer. If they're not a business lawyer, there's certain accountants that don't deal with tax. So if they don't deal with tax, they might generally know tax, But that's not what you need. If you need a really strong tax advisor, you need someone who specializes in tax. That's what I put. Good tax advisor. Good bookkeeper. I don't say that because I'm in the bookkeeping business. I don't say that because I'm in the tax business. I say all of these things because this is a good foundation for a team. Because if you're spending time figuring these things out yourself, doing your own books and so on, you might think that you're saving some money. What you're actually doing is taking time away from what you're good at. What you're good at is delivering whatever it is that you deliver and making the sale. So I also have in here a marketing team. Even if you're not, when I say a marketing team, I'm not talking about somebody that you're having to pay every single month or so on. Have a relationship with a really good marketing advisor, a really good marketing consultant, so that as you're putting some things in place, you can pick their brain here and there. Every single client that I have knows that I am as close as the phone or a text or an email. If there's something that they need, it's like, I need to pay my HST and I forgot what this line's supposed to look like. They'll call me. That's what the relationship you want with your marketing team and with the tax advisor and so on. It may sound like, well, a lawyer's not just, if you have a good relationship with all of these people, they will be happy to work with you and support you because they want you to succeed. So again, focus on spending time on your business, at what you're good at and what makes you money. So what are we doing here? We're building and maintaining cash flow. And by including the 10-10-10 rule in the plan, you have included a plan to save. So take that savings plan that you have. So if you think that you're going to be putting away $30,000, sorry, I think we came up with $12,000 or $13,000. If you think you're going to have $12,000 or $13,000 at the end of the year, talk to an investment advisor about the best way. So I'm keeping this money every single month. What should I do with it? An investment advisor, your tax advisor, talk to them and make a plan to accommodate that money every single month. And then put your MAD money into a separate savings account. That's my vacation money. That's my clothing, grocery fee money. That's my Christmas shopping money. Oh my goodness, Christmas. So put your MAD money into a separate savings account. You want to keep your life and the things that you're trying to accomplish for your life separate from what you're trying to do just to survive. The other thing that I didn't say early on is this. I should have put it on this page here. One of the simple rules is do not use your personal account for business transactions. Many small business owners do that. They want to avoid the business service charges. Don't do it because the money gets mixed up. It's more difficult to track things. If you get audited by CRA and everything is going through your personal account, I'll tell you what CRA does. They look at it and they say, any deposit line in your bank is income unless you prove it to us otherwise. If they're looking 3 years back of transactions, are you going to be able to prove to them that every single line in there is not income? Do you want to be in that position? The other thing is if it's going through your personal account, how is it allocated to your business? Get a business account. I don't care if you're not incorporated. Get a business account. And even if the business is in your name and doesn't have a business name, doesn't matter. Get a business account in your name. So I've been talking all about cash flow and not about profit. I don't know if any of you noticed that I didn't talk about profit, except for the taxable income part. Why did I talk about cash flow and not profit? Because as many businesses have found out, you can have profit and no cash flow. And I can't tell you how many times at tax time I'll have a business owner say, how did I make any money? I don't have any money. How did I make any money? How do I owe taxes? Because you didn't plan for taxes. You have large capital purchases, which are not direct taxable expenses, like computers, vehicles, and equipment. And now we're getting into the accounting and tax planning part of it. But don't think that you're not going to have a profit and you're not going to have a tax line because you're spending. So you can't, don't say, well, I bought a new computer, or I bought a new desk or something this year. I spent $2,000 on a new desk. So I'm not going to have to pay tax on that. Well, that's not a direct expense line. It factors in, but not directly. So if you're thinking of, and all of a sudden you have a $2,000 profit and you didn't think, it's like, well, what happened? That's what happened. Or people are paying off debt. So all the cash that they're bringing in, all the profit they're bringing in is paying off debt. So the actual cash itself is gone out of the business and out of their hands. Or they have large accounts receivable. These are all typical. Every single one of these items, I can tell you, every single one of them, one or a combination thereof, is the main reason why people don't realize that they're going to owe tax. They don't understand why they don't have any money, but they're making a profit, because they didn't know and they're not paying attention to some of these items. So I've covered the basics. The reason why I covered the basics is because you need to understand these basics to effectively run your business. Some of you are just like, this is not stuff, it's not, is it exciting? Is it sexy? No. Maybe to an accountant it might be, but it is the foundation of a good business. Just like the foundation of your good service, or just like the foundation of your, what is the foundation of the good deliverable? What is it that you do, you put together and you take the time and you assess it and you analyze it and you perfect it and you manage it and you measure it and then you change it again and you improve it. That's the good foundation of what you're delivering. This is the good foundation of how you run your business, and you're going to keep your business not only viable, it will grow. So, any more questions for anybody that's still awake?
Oh, we're definitely awake. Maybe our eyes are a little bit bigger going, that's foundational? Holy moly. Oh, well, thank you, Kim. That was great. So much great stuff to chew on. Yeah, amazing. And so clearly broken down. So thank you for taking the time to be so clear in your presentation. So I'm going to open it up to the floor. If you guys have any questions, feel free to write them in the chat box. If you want to unmute yourself, you can do that as well. One point that I did want to make, because in your list of, having a good team, you mentioned lawyers. A couple of weeks ago, we had an organization or a presentation by the founder of an organization called LawyersInHouse.ca, I believe it is. It's CA or com, one of the two. They are excellent at working with entrepreneurs because they're entrepreneurs themselves. They are all lawyers. I would advise that you reach out to them if you need to build a relationship with a lawyer, because in this case, you're not just building a relationship with a lawyer, you're building a relationship with a fellow entrepreneur as well, because these are all lawyers who are entrepreneurs as well. And their goal is to support entrepreneurs and startups. So that is definitely an organization when it comes to lawyers that Spark is very pleased to be able to partner with, and whom we would highly recommend in this case, for sure. So I'm looking to see if there's any questions so far.
Well,
yes.
Well, I appreciate. So, and sometimes people don't want to ask questions because they're pretty personal questions. So, so I put my contact information out. So if you have questions, you can also get in touch with me. So I want to thank you. I thank Spark for asking me to do this. Actually, I like doing this. This is my sweet spot. I love to do this stuff. I love putting all these numbers together, and I love putting the whole concept together, because, and then teaching it is because it's for me, it's just really fun. So what you want to do, because it's not fun for you, work with people that it's fun for. And you know, like you said, the Spark team, there's things that they do that's fun for them too. So, you know, reach out to resources around you and work with people and have some fun with it. It sounds like a really serious topic, but you know what? Your business is serious, but you gotta have fun. So thanks.
Well, you are very welcome, and I agree with you. Your business is serious, but you definitely have to have fun. Always remember the reason why you started your business to begin with. It was obviously something of passion, and you got to keep that passion going. Absolutely, for sure. So thank you, Kim, so much for taking the time to be with us today, to
You're
share
welcome.
your knowledge. I encourage you, if you have any questions, to reach out to Kim. She absolutely is always available, and we'll take the time to not only give you the answer, but to break it down and make sure that you clearly understand what it is that she is telling you.